Now, China is signaling a 25% tariff on imported cars. This follows Washington's announcement of tariffs on China and could be the first sign of a tit for tat that will increase between the nations. For more on this development, we have our very own Akiko Fujita for more. Akiko, what are you looking at here?
Yeah, Maddie, you pointed to the timing of this. No coincidence that reports of a potential tariff on goods coming into China could be ramped up just 1 week after President Biden announced a steep increase in tariffs, particularly around Chinese EVs. Now the deputy director of China's Automotive Strategy and Policy Research Center is publicly calling for an increase in tariffs for cars imported into China. Right now, that rate's at 15%. He wants that to increase to 25%. Now, the question is, how significant of an impact will this be when you consider where cars are manufactured? China is the largest manufacturer, and there's questions about how much of this is really going to be symbolic. Now, China is reportedly looking to raise the tax on cars with larger engines. That would largely apply to German car makers that export SUVs and sedans to China. And we saw those shares of BMW and Mercedes getting punished in European trade, down more than 2%. The deputy director here saying China imported 250,000 cars in that specific bracket last year. Compare that to the 30 million vehicles that were sold in all of China. So it's a very small portion here. Now, all of this comes as the EU wraps up its own investigation into Chinese subsidies. Preliminary tariffs are due by July 4th for that, but officials have hinted they could be announced sooner. And on the U.S. trade front, we got a clearer picture on when some of those steep increases on tariffs for Chinese goods are likely to take effect. The USTR's office saying today those for Chinese imports, including EV batteries, computer chips, and medical products, are set to take effect on August 1st. Guys?